Right, let's head to the markets now with Anita Edet. I hope we still have that green color, Anita, that we closed the market with yesterday. Is that retained in this afternoon?
Yes, yeah. Well, any good news is that it's not just maintaining that green, but just close to, is at the corridors of the 97,000 points.
Yeah, I was hoping we'd have crossed that by now. We've been hoping for that since this time yesterday, you know. But I saw that at the close of trade, even though we still closed in the green, we lost some points, you know, leading us close to that 97,000. So I guess that's why we have not hit the 97,000 level for the all share index.
Well, intraday, it's quite interesting to know that the financial services stocks, the banks, as well as some other oil
insurance,
and gas
I believe too.
Insurance yesterday was down by about 2.2%, and then consumer goods was also down 0.4%. But at some point, insurance stocks are still fluctuating, so it's still the banks that have it.
Okay.
And of course, when we talk about the bank recapitalization as well as the insurance recapitalization, so that's all to be taken into cognizance. Okay, so now let's start off the day for market numbers. At intraday, take a look at the numbers there, 0.48%. Nigeria's all-share index, the NGX ASI, 96,000. This was the last, about an hour ago, we had this number, and the number is still changing as we speak. So maybe we might hit the 97,000 points back again. You're just fingers crossed. We'll get to see how that turns out at the close of Tuesday's trading session. For the Johannesburg Stock Exchange, it was a 0.91% pullback at intraday. Yesterday, we saw that number at about 83,000, but of course, profit taking has taken off the shine from that number, which you see there, 82,723.13 for the Johannesburg Stock Exchange All-Share Index. And on the other flip side of the African continental indexes, EGX 30, that's for Egypt, 0.37% uptrend at intraday at close to the 31,000 level, just 30,920.04. And for the Kenyan Stock Exchange, starting of the month of September, closing Monday, up about 0.8%, and then still within this number, this 100, but in a new threshold, 104.50 for the close of Monday's trading session. Now, let's talk about the fixed income market, where we see first, yesterday we saw the federal government, the usual starting of the month with the FGN savings bond, two bonds actually. We have first the savings bond before you now have the next bond. And of course, we also saw that the Naira, it started off the month with some gains. Of course, the Naira has been taking a bashing. The value has been eroded against the dollar and against so many other major currencies. But in terms of the fixed income market, we saw the bullish sentiment on the side of the treasury bills as well as the bond market. So now to give us more details about this at both intraday, and of course, when we also look at the month of September, looking at the second quarter or the fourth quarter numbers of the fixed income market, let's bring in Tobechukwu Ikpe, fixed income dealer with Access Bank, to give us more details about that. Thank you for joining us, Tobe.
Thank you for having me, Anita.
Okay. So now let's start just a little bit. Just can you recap some of the activities that started off the month of September, especially when you're looking at the fixed income market, the bonds calendar for the month as well as the quarter?
Okay, so for the month of September, I think we should start from where the market closed last month in August. We saw bullish sentiment closing the month. This was largely triggered by the downtick in the last inflation figures. So people have been waiting for that, for inflation to start trending lower. And once that signal was given in the markets, they saw people start to purchase these high-yielding securities due to forecast of rates declines across board from the US Fed looking at rate cuts at their next meeting, and also possibly rate stabilization in Nigeria for the local market, so at the MPC. So people started taking advantage, positioning themselves in both the T-bill space and the bond space as well. So for the T-bill space, ending the last month, opening this month, we saw rates decline from the belly of the curve to the long end by over 200 basis points. For the bond space as well, the long tenor on the run bond 2033s, we've seen a rally on that paper as well by over 100 basis points, people buying that bond down. But opening today, the month of September yesterday, markets opened on a active note. People with still that bullish momentum, but the CBN included an Omo auction with dampened activities yesterday for the fixed income space. And that's due to the Omo auction debit of yesterday, taking out liquidity from the system. That slowed activities for today as well, as they were not seeing much buyers in the market for these fixed income securities across the bond and bill space. Okay. So at the Omo auction yesterday, CBN sold 459 billion, which was just under which they used to take out liquidity from the market, which had a liquidity of about 500 billion. So that's what we've seen so far opening the month.
Okay, Toby. So now we're still talking about the month, and this time the FGN savings bond at 18.2% interest. Now this is quite attractive for investors, but on the side of the government, what does this mean? Does it mean more pressure in terms of borrowings? So tell us more about this FGN bond before we have the bigger bond in a couple of weeks from now.
So for the FGN savings bond, this bond is largely targeted at retail investors, unlike the regular bond auctions where the minimum subscription is about 100 million naira. The minimum for this is 5,000 naira. So if you have 5,000 naira, you can participate in the FGN savings bond up to a maximum of 50 million. So they don't really expect high net worth individuals and institutional participation at this bond. It's targeted at retail investors, and it's just an avenue for the federal government to preserve the wealth of Nigerians, also for them, another avenue for them to raise more funds. These rates on these bonds is said for 2022 year opening is about 17%, for the 3 years about 18%. This is relatively cheaper than where they raise the regular funds from, which reduces the federal government's debt servicing costs in the long run as well. So for the regular bond, you see them raising funds as high as 19, 20, 21%. This FGN savings bond targeted at retail investors helps the federal government, opens up new avenues of capital for them to funds at cheaper levels.
Okay, Toby. I think because of time, I think we just have to wrap it up there and leave it there. So thank you so much for your time. And of course, we look out for how the markets at intraday. Yes, we know the market, the fixed income instruments, they're moving at intraday, but we'll look out for their numbers at the close of Tuesday's trading session. Thank you so much for your time.
Thank you.
That was Tobe Chukwu Ipe, fixed income dealer with Axis Bank for the fixed income market numbers. Okay, so let's talk about Middle East markets. Middle East markets, they were mostly in the green. The GCC stocks, that's what we call them, or that's what they're called. We saw some advancement there on the two sides of this market, on the UAE, Dubai, as well as the Abu Dhabi. One in the green, one in the red. Now let's see the other sides of the market for Saudi Arabia. Tadawul, a flattish positive, but this number is still moving, while the Qatari Stock Exchange also in the green at intraday 0.38% at 10,383.42 for intraday numbers. Now let's fly over to the United States. Yesterday it was Labor Day holiday, so US market was closed, but ahead of Tuesday's opening session, the stock futures were all in the red, 0.51%, for the Dow Jones Industrial Average, S&P 500, 0.52%, and the Nasdaq Tech Heavies, 0.73% in the red. Of course, the market is quite heavy with some economic data which will be out, starting with today, where we see the ISM Manufacturing Index for August is due to be out today. On Wednesday, the July Durable Goods Orders and the Fed Beige Book, which is more like an economic gauge of about 12 states within the United States. The ADP payrolls report for August, as well as the Friday jobs report, where all the global markets will be eyeing the U.S. market for that all-important jobs report. And let's not forget that September is the month in which the U.S. will begin to cut interest rates, which is especially to start from the 17th and 18th of this month. So the market will be looking out for that. Now, from the United States, we go over to Asia, which is our final stop, whether the bus stop or the air stop. So for the Nikkei, 0.04%, all the markets across the Asian region, they were in the red, and no thanks to the numbers out of South Korea's inflation numbers. The CPI was, although it came in lower compared to what we had in July, for August it was at 2%. And versus 2.6% in July. So that's it for all the markets. Let's take a look at China's close. all of the market, like I mentioned, they were all in the red, and this is because of so many other economic factors to be considered, but most likely profit-taking for the Asian market. So, that's it for the Asian markets as well as other markets that we track at intraday.
All right, Anita, thank you so much for that.
Pleasure.